You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is time to dive into what is cooking out there in the land of futures options. Yep, it is time for TWIFO. My name is Mark Longo from theoptionsinsider.com, as well as from the network upon which so many of you have been binging all week long. I will be your host, your guide through this approximately 1 hour long journey through the world of all things futures options. Remember, you like what you hear? This journey and the other journeys that we take throughout the week here on the network. Just got off a banger episode of the Option Block, our buddy, the Flow Master, doing really just a master class in how to trade ARB using the stock and some of these convertibles we see going on out there, these convert ARBs, tender offers, really. It's fascinating stuff. So if you are intrigued by all of that good stuff, listeners, then make sure you listen into the full network. And maybe you're intrigued by what we do, in which case, by all means, leave a rating, a star, a review, all that stuff. It helps new people continue to discover the content. And of course, if you want to discover more content in your lives, only one place, literally the only place you could possibly go to discover more content would be to theoptionsinsider.com/pro. Once you're there, what's going to happen? Well, you're going to get access to 300 plus episodes of awesome exclusive pro content. The whole pro podcast feed is available to you, including that awesome panel I did just with our buddy, the Flow Master, and a whole bunch of other great guests back at the STAC conference. That went up for you folks because we like you folks over there, as well as 2 exclusive shows a week, pro Q&A coming at you every week, as well as options oddities every week, as well as live access to this and everything else we do, as well as, of course, awesome giveaways. Congrats to our pro member, Chi-Town Indy, took home the February Pro Trading Crate. Will you be the one to take home the March crate? Only one way to find out. Theoptionsinsider.com/pro is the place to go as we go around the horn to see who's joining us on the old CME Group hot seat this week. I am pleased to welcome back our old friend, Miss Carley Garner, the senior analyst, gotta get the title right, senior analyst and broker over there at DeCarley Trading, as well as the author of 1 or 2 or perhaps half a dozen futures and futures options oriented tomes, including higher probability commodity trading, trading commodity options with creativity, and a trader's first book on commodities. So all of you who keep asking us, where should I start with futures options? Maybe you should start with Carley's book. A trader's first book on commodities, a golden book on commodities trading, if you will, Carley. Welcome back to the show. And was that your audience? Was it the kids who are learning how to read and also learning about commodities?
Yes, it is. Thank you very much for that intro. And just to clarify, I am the senior analyst, but I'm also the only analyst. But it doesn't sound very good to list only analyst at DeCarley Trading as your title.
Only analyst makes for a poor business card. So we'll go by senior here on the show.
I like it better too.
I like it. As we keep on rolling, it is time for the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side and the dark side from an underlying and from a vol perspective over there at CME Group this week. And listeners, if you came for a whole bunch of hot dark side action, you might be disappointed. This is one of the more green weeks I can recall seeing over there at CME since we've been doing this show. Looks like I'm going to say roughly 80-20, maybe 85-15 green over red this week. Looks like we could maybe scrape together a dark side 10, but that would be about it. And that would be really scraping the bottom of the barrel if we got to the communications sector in the S&P, which is barely off, or maybe the 3-month SOFR, which is kind of unched on the week, off 0.05%. But that's really about it. So dark side is kind of scraping the bottom of the barrel. Of course, not the case for vol. We can always find a little vol dark side out there. But Carley, where should we start our journey this week? To the light side, to the dark side? And also, I'll give you an added choice. We've mixed things up since last we chatted. Also talk a little bit of vol now on the Movers and Shakers. So where should we start, in the vol or in the underlying and light side or dark side? You get 2 choices now.
Oh my gosh, that's a lot. All right, light side in the underlying.
All right, to the light side we go. An excellent choice from the only broker over there, or the only analyst, I should say, not the only broker, the only analyst over there at DeCarley Trading. All right, to the light side of the underlying we go, listeners. Carley chose well because it is an embarrassment of riches on the light side this week, listeners. Yeah, we had to cut it off at 5. We could have made a top 50 if we really wanted to. But number 5 shows you how effervescent the light side is this week, listeners. Gold up 5.3%, and it's all the way down to number 5. That would usually be maybe enough for number 1, but not this week, listeners. Things are popping. I hope you like some metals, because we got some for you in the top 10 and the top 5 here. Number 5, metals, kicking things off in the shiny stuff. Right behind it, keeping it in the shiny stuff with Uncle Mike's favorite. This is silver. Number 4, up 8.04%. Number 3, some call it digital gold. It's not. It's a crypto asset. It's Bitcoin, up about 8.25%. It was number 1 in the same direction last week, up 19.17%. I mean, this run that crypto has been on of late. If you're not checking out our crypto rundown program out there, listeners, then you really need to check it out, listeners, because it is the place where we really dive into all this action in a lot more detail on the network. I mean, we touch on it here, but that's a whole show devoted to if you want to hear Bitcoin, Ether, Solana, all this madness, the vol, the skew. We get into all that on the crypto rundown every Monday, or you get it, of course, wherever you're getting the TWIFO program out there. Number 2, the Carley special. The reason she's on the show. I'm joking, of course, but it does work out well when it's popping. It seems like it happens a lot whenever she's on the show. Nat gas is popping this week. Number 2, up nearly 9%, 8.92% for number 2. And number 1, back to the metals. It is palladium, up 11.32%. It was number 1 in the other direction last week, off nearly 3.5%. So we've kicked lumber to the curb in terms of our frequent offenders on the movers and shakers. Might have to add palladium in there. Seems like it's in there just about every week. And again, like lumber, there's no real options paper to speak of, so you can't really talk about it. So it's a bit of a shame, but it is intriguing nonetheless. All right, to the dark side we go. What little of it there is this week. Number 5, rough rice. It seems like it's always a rough week for rough rice, off 2.13%. It was number 3 in the same direction last week, off about 2.34%. Number 4, right behind it, KC wheat, so keeping it in the ags, off about 2.5%. Number 3, keeping it in the ags again, it is oats, off 3.37%. Number 2 in the other direction last week, up 5.2%. So giving back a good chunk of that this week. Number 2, still staying in the ags, but going out to the dairy. Listen to our pro Q&A this week, listeners. Our buddy Ash talking about some dubious correlations between dairy and some other big assets that you actually like to trade. It was kind of fascinating. So maybe dairy more important than you think. But nonetheless, class 3 milk, number 2, off 6.5%. And coming in at number 1 to the dark side this week, Chicago wheat off 7.38%. All right, to the vol movers and shakers we go now, Carly. Which way again, light side or dark side?
Let's go light side.
All right, to the light side we go. Double light side for Carly this week. She's feeling optimistic. All right, so number 5 to the light side. Again, we just talked about a lot of metals. It's the aggregate metals CVOL. Remember, you can find these, just search for CME and CVOL, listeners. You'll see what we're talking about. Coming in at about a 1590. That's for the entire complex now. That's up nearly a full point, about 0.83. So getting a little bit more juice pumped in there. Number 4, Chicago wheat, 32, almost 32 and a half, about 32.43, up about 1.14 points on the week. Number 3, back to the metals. It's copper, 17 and about a third, up about 1.15 points on the week. Number 2, man, metals palooza this week. Number 2, it is platinum, up 1.25 points, trading at almost 25, about 24.91. And the number 1 vol light side mover this week, listeners, again, metals, it's silver. 27.30 is where that CVOL is, up about 1.7 points on the week. So vol popping in the metals. Again, metals not normally known to be bastions of volatility. So when you get a little juice out there, that's certainly worthy of note. Maybe I'll have to hang out in the metals this week. And then to the dark side we go. Again, there is some dark side vol always to be found this week. And it seems like this week it is monopolized almost entirely by the rates complex. The 5-year, 140, almost 141, off about 2.3 points. 30-year, number 4. That's at a 108.25, off about 2.5 points. Number 3, the aggregate treasury CVOL, so the entire complex coming in 130.2, off nearly 3 points on the week. The 2-year, a little bit ahead of it at number 2, 158.85, off again almost 3 points, about 2.95. And then leading the dark side movers this week on the vol front, it's the 10-year, everyone's favorite, 125, pretty much even, off about 3.4 points. So again, rates not known to be bastions of volatility either. So we have 2 interesting juxtapositions. Metals not known to be places people go for vol, and yet they're popping from a vol perspective. And not much juice already in the rates complex, and they're wringing what little is left out of it this week, it sounds like. So intriguing stuff. But because Carly is joining us, and because I know it's her favorite complex of all time, we have to start in the energy first.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, you know where to go by now. CMEgroup.com/TWIFO. Once you're there, go into that drop down, pop down. Let's see, how many slots are you going to pop down? You're going to pop down 3 to energy, and then you're going to pop down 3 more in the product family to Carly's favorite of all time. It is nat gas here. Getting a little bit of lift back, getting a little bit of love back, perhaps, after languishing for a little bit out there. Coming into the start of the show, 185 pretty much. That puts it up only about a penny net since Monday. Of course, you go back to the end of our show last week, it's up nearly 9%. So again, a little bit of a frame of reference there. In terms of volume, seems like we're starting to come back a little bit. The post-holiday, we haven't really seen a ton of volume out there in nat gas. Starting to come back on now this week. 770,000 contracts on the tape right now. So that's roughly 330,000 more than we would expect back just a few months ago in nat gas by this portion of the show. So interesting stuff. Carly, I know when you're not talking to me, you're out there slinging nat gas left, right, and center. What's catching your eye out there in the world of nat gas this week?
Well, it's important to note that natural gas has not spent a whole lot of time under $2. I mean, we've been here before, but it never stays here. So this is probably temporary. I think any large dip is going to be an opportunity for the bulls. I'm holding out at this point. We've pretty much advised our clients to move to the sidelines, and we're holding out, hoping we get a little bit lower, maybe 15, 20 cents lower, which would be a retest of the lows of a few weeks ago, fill some gaps down there. it's a shoulder season. And to be honest, there's so many people that were probably caught on the wrong side of this market. I'm sure they're looking at the rally that we've had over the last couple of weeks as kind of their place to get out with their shirts and then try to regroup. And so I think that's exactly what's going to happen. And that should suck the market down temporarily. But wouldn't want to be short because in the big picture, I think we're going back into a period kind of like what we saw between 2010, 2020, where we traded between $2 and $4. So I think the upside is only 4, maybe 5 if something weird happens, not 6, 7, 8 like we've been kind of seeing the last few years. But the reality is 150 is way too cheap for nat gas. It's probably not going to stay here.
You just burst the bubble of all of our listeners. So we don't have any more Ukraine-driven threatening the 10 handle in nat gas anytime soon. What fun is that, Carley?
It's no fun at all.
Speaking of fun, I know you said you're cautioning your clients to kind of sit on the sidelines. Does that mean you're not having any fun out there in nat gas right now? No funky upsides, no ladders, no risk reversals, nothing like that?
We were kind of caught on the wrong foot a little earlier this year. And so we kind of broke apart some of our spreads, and we're basically holding some cheap calls, very, very cheap calls. I think they're April 225s, if my memory serves me. So kind of flyers just in case something happens while we're regrouping. But we'll get way more aggressive if things dip another 15, 20 cents, like I said.
We get another one of those Ukraine-driven pops. Those 2 1/4 is going to be looking pretty good when we hit that 9 handle, Carley. I'm just talking it up. No one wants a 9 handle unless you've got those calls. Then, of course, you want that 9 handle. I think for the rest of the world, probably a terrible thing. But for your calls, looks pretty good out there, Carl. Let's see what we're seeing out there this week. What is looking good out there this week? Like we said, a pretty active week again after nat gas. Got kind of sleepy once it started drifting to threatening the 1.5 level. The volume kind of went into the toilet. Back again this week, like we said, threatening 770,000 contracts. And of that, 32% of it going up in the contract that has about 18 days to go. The nearest dated contract right now is going out in about 15 days. So you're not seeing any 0-day paper, dare I say it, out there in nat gas, or even weeklies right now. You got to go out a couple of weeks in nat gas. And that gets us to, again, like I said, about 18 days to the April contract. What is the vol out there? You might be asking. No, nat gas has been hanging out in the high 50s, mid to low 60s for a while, and it's coming off a little bit now, back to the high 50s again, 57.5 right now, off about 6.5 points. So again, frothy compared to most of the assets we're going to talk about here on the show, with the exception perhaps of crypto if we get there. Outside of that, nat gas still more volatile than just about everything else out there at CME. In terms of skew, last week the puts were leading the dance, 4.8% bid. That did not exactly materialize, as of course we had a little bit of a rally since then. Now that bid has kind of vanished, about 1.5%, so roughly flat to the at the money. The calls last week, nobody wanted to touch those. They were kind of flat, about almost 1 point discount, not much going on there. This week they've swung mildly in the other direction, 1.6% bid. But again, we have pretty much an equidistant, I would say mostly flat bid in both directions right now. So the skew right now, not really telling us a heck of a lot in terms of the direction where the options market thinks we're heading. In terms of the action out there, looks like some folks are intrigued or maybe concerned that we might be taking a pivot back to the dark side out here, because we have a lot of action on the 1/2 puts expiring in, like we said, about 18 days, leading the dance with about 35,000 contracts this week. The big day, almost half of that going up on Monday, nearly 14,000 contracts. Only slightly opening, though. So it looks like a lot of back and forth paper on these 1/2 puts as we started to move away from that strike a little bit. Almost 11,000 on Tuesday, again, slightly closing. So it seems like folks are getting the heck out of Dodge on that strike, which, again, hard to blame them. We've rallied away from that strike now. They want to get the heck out of Dodge. Yesterday and today, both about 5,000, 5,500 contracts. The OI coming into today is 34,000. So there's still a lot open on this strike. So if they're putting up 5,500 today, they could be getting the heck out of Dodge there as well. What do you think, listeners? 18 days to go, 1/2 puts. Would you be a buyer or a seller of those? It seems like a long way to go. But again, we've seen some crazier things out there. And actually, you know what? I did miss one, listeners, that is even a little bit more active. If you said, 1/2 puts in 18 days, that's okay. But how about 1/2 puts in, I don't know, nearly 50 days, 49 days, all the way out to May? Well, then we got you covered with our actual number one, actually taking the top spot by about 3,000 contracts. 38,000 of the 1/2 puts in May going up this week. Again, 38,000 of those, the big day for those was Wednesday. 12,000 on the tape. Mostly looks like folks getting the heck out of Dodge there, followed by 11,000 on Monday, slightly opening there. 8,800 today, 7,000 on Tuesday, opening on Tuesday. Today's paper, we have no idea, but 43,000 is opening on that strike, so folks could be getting the heck out of a Dodge. Carley, you talked about maybe a little bit of near-term retracement to the downside here. Are you surprised that we're seeing so much action on the 1/2 strike for the next couple of months, or is that kind of what you expected? And it sounds like you would be probably a seller of those, I'd have to guess, if that was the case.
Yeah, I wouldn't be a big fan of buying those outright. Like I'd mentioned, we don't really stay down in these levels for very long. I'm wondering if maybe there's some more hedging, like long-term traders. A lot of times will go long futures and then buy puts to hedge. And maybe that's kind of what they're doing, at least puts a floor on their futures just in case something wild happens, like we saw in crude oil 2020 going negative. They just want to take that downside risk out. So I'm guessing that might be part of it, but could be wrong.
Yeah, it's not stopping you out with much, only 1.5, but I guess you're right. Yeah. If we do revisit the negative territory, that 1/2 strike could look amazing in hindsight. So yeah, I guess in that frame of reference, all puts are great. Buy
Cheap
them all.
Insurance.
Buy those quarter puts while you can get them. Those are juicy. Once you look back at April of 2020, all things become different, don't they? All right, let's go back out at number 3, 1 3/4 puts. So if the 1/2 puts aren't doing it for you all the way out, nearly 50 days, 1 3/4 puts coming in at number 3, 33,000 of those. The big day for those actually today, 13,000 against OI of 26,000. So it could be taking some off the tape. 1 3/4, those obviously have a little bit better shot out there. I could certainly see a better argument for those versus the 10,000 going up on Monday, slightly closing there, 8,000 on Wednesday, and about 2,300 on Tuesday. So again, looks like they were closing earlier in the week. And the paper lines up pretty well on Monday. They could have rolled the 1 3/4 down to the 1/2 puts roughly 10, almost 11,000 times. Again, a weird time to be doing it when we're rallying away from your strike to be rolling down, but we've seen funkier things out there in the land of all things nat gas. Let's scroll out a little bit, see if we see any other weird and or aberrant paper. If the one handle puts aren't doing it for you, listen, let's go all the way out to October to the 2 puts, the 2 strike, going up 12,000 times this week, listeners. Almost all of that on Monday, 8,300 on Monday, slightly opening, about 2,000 each almost Tuesday and today, and that's kind of about it. But yeah, the 2 puts all the way out there in October. By the way, worth noting, the future out there is at a 260. So again, a very seasonal contract out there, and the 2 put makes a lot more sense when you see the future still a ways above that out there. All right, Carley, anything else catching your eye in nat gas? And if not, where would you like to head next, madam?
I think we covered natural gas pretty well. We want to talk about gold?
Oh, is something happening in the metals? I didn't notice from all of the domination of our light side this week. All right, to the shiny stuff we go, listeners.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, like the man said, it is time to talk about metals. Go into that drop down, pop out of the energy, go almost all the way to the bottom. You're going to go one from the bottom, listeners. Then you're going to go into metals. And then from there, you're going to go precious. And then it's a pick our poison. We got silver, we've got gold, we've got palladium, all lighting up the light side. If you want to throw digital gold in there, and then Bitcoin as well. But I'm kidding for all you gold bugs out there. But to the land of gold, I think we will start with, obviously, it is the most liquid of the shiny stuff in terms of volume out there. And yeah, an intriguing period to be talking about all this upside in all the metals. You don't see a lot of scenarios where the markets are at all-time highs in the equity space, and yet the traditional quote-unquote flight to quality assets also rallying hard. Again, maybe showing a wee bit of underlying turmoil out there. Coming in to start the show, gold well north of that magical mythical 2,000 level, 2167 as we're kicking off the show, up 71 points or about 3.5% just since Monday. So popping hard just this week. You go all the way back to the end of our show last week, 5.3%. Carley, what's catching your eye out there in the land of the metals? And does it intrigue you that we're seeing so much upside in these assets where the traditional equity markets are also at all-time highs?
It's definitely interesting. It's almost like, gold market saw what was going on in NVIDIA and Bitcoin and got us excited and wanted to join the party. And I think that's exactly what's happening. I mean, the reality is gold traded sideways for 4 years, despite all the narratives that should have pushed gold higher. It just couldn't break above 2,100. And I think now we're finally ready to play some catch up. So I've heard a lot of people mention that they think this is kind of a bull trap or a false breakout. I don't think it is. I think this feels a lot to me like the 2010, 2011 time period for gold. And I think if I'm right about that, we probably are going to run up to a weekly trend line. If you draw a trend line through the 2016 high and the 2020 high, it puts us around 2640, 2650 in gold. And believe it or not, I think that's where we're going.
Are your clients calling you up to get a lot of gold and metals action right now? Is it a hot time in these traditional flight to quality assets?
It is a hot time. This is a really tough trade though, because gold trades sideways has, like I mentioned, for 4 years it went nowhere, and for the last 7 weeks it literally was just dead in the water, nothing going on. And then it made its move while nobody was watching. And that's how gold works. That's just how the market is. So it takes a lot of patience. And it also takes a little bit of luck because it's hard to be in it when it actually finally decides to move. So yeah, there's a lot of people that really want to chase this rally higher. I do think your best bet, even though I'm bullish, I think we're going much, much higher. Chasing gold is never a good idea. I haven't seen very many people make money doing that. So try to be patient. We may come back down and retest the breakout area. So we're talking like 2,100, maybe even a little lower. In my eyes, as long as it holds 2,000, we should continue to follow through with the breakout up into the high 2,000s.
Interesting. So wait for gold to pause a little bit, take a little bit of a respite before
we're lucky.
Before you dive in and chase that like a dog chasing the bumper on a car, listeners. In terms of action out there, how much action are we seeing in gold? It's a banger week, listeners. Usually 200, 225, maybe 250 if we're feeling frothy. This week, listeners, almost 450,000 contracts. So again, people are feeling their oats out there in gold. I'll have to go back and look historically. How many times are we at new all-time highs in the equity markets? We have gold revisiting and retesting near-term highs, and we also have volatility remaining stubbornly frosty, shall we say. Not exactly a scenario we see very often. Usually when one of those is happening, the other two probably turning in the other direction. So intriguing stuff to be found out there. Let's see what kind of intriguing stuff we can find in all this tsunami of gold paper. Now, the interesting thing about gold, it's not all 0 day. It's not all about what have you done for me lately. Metals paper tends to be a little bit longer term, a little bit more upside focused. And that's what we're seeing right now. It looks like a little over a quarter, 26.6% of the volume this week of that nearly 450,000 contracts is going up in the April contract. It has about 18 days to go. So we're going to head out there as well. What is our vol in gold right now? We said gold is leading our vol movers and shakers this week. And that's reflected here. That April contract, almost a 14. You might say, well, big deal. That's not much. But again, gold vol is now rivaling VIX. That should tell you something. Up 2 3/4 points. That's a huge move for gold vol. We don't see gold doing that a lot. So that in and of itself makes my eyebrows go up and makes me want to say, In terms of skew, weirdly unched on the week. That is kind of surprising given a little bit of the move we've seen out here this week. The puts last week, 6% cheap. This week, 6.4% cheap. So no real change there. The calls last week, 9.6% bid. This week, 9.5% bid. So almost literally unched on the skew. That is interesting, given the fact that I expected to see a little bit more upside juice out here. We do see that in some other terms out here. If we go all the way out to, let's say, all the way out to April, almost about 30 days, then we have about a 12% bid in the calls, but that's really about it. You don't see, I guess if you go out to end of the year stuff, you go out to November, December, then you start to see, January, you start to see a 16, 17% bid in the calls. We got to go a ways out for that. Outside of that, near dated stuff, not a lot of evolution on the skew, which is a little bit surprising. In terms of action, it was the 2200s. I said that futures at about a 2167 right now, listeners. So 2200, could that be in the offing? Carley just warned you. It's kind of hard to make money chasing gold, but looks like some folks are lighting up the 2200s this week, even though it seems like a lot of folks were getting the heck out of Dodge. 16,000 of these going up. So it's interesting. It shows you how spread out the paper is in gold, because with almost 500,000 contracts, the biggest, most active contract, only 16,000. So paper all over the place in gold this week. 2200s leading the dance. The big day was actually Wednesday, 5,500 closing there. 4,500 on Monday, slightly opening. A little under 4,000 on Tuesday, closing again, and about 2,200 today. That's against OI of about 8,400. So anyone's guess what they were up to out there, but intriguing stuff nonetheless. Right behind that, listeners, we have to go out a little bit again because it falls off a cliff volume-wise. Let's go out a little more let's go out to the 2,300s in June. So 2,200 not floating your boat. Let's go out to the 2,300s. That future's at a 2187, so pretty much exactly 20 points north of where we were just talking about. And those went up about 11,500 times this week. The big day for those, Tuesday, 5,400, 2,500 today against OI of 9,000, and about 2,000 to 1,700 each Monday and Wednesday. Looks like opening all week long. Looks like somebody was taking off nearly 5,000 of the 2,200s on Tuesday, so they could have been rolling up. Could have been some rolling up action. Again, we are threatening that 2,200 strike right now in that future, so that makes some sense. Take out the 2,200s and keep the party rolling up to the 2,300s. The rest of the week, it seems like it's just straight opening paper on the 2,300. So intriguing stuff out there. I do expect to be upside biased. Obviously, that's the way gold tends to trade. What we're not seeing is a lot of that funky stuff. Carley, when we used to talk about gold on the show, it was almost expected that there would be some sort of funky fly or three-way or iron condor or something else like that, where people are just specking on absolutely absurd strikes to the upside, 3,000, 5,000. I'm not seeing as much of that this week. I guess people are just coming in and just buying the 2,200s and buying the 2,300s. Not the sexiest thing, but you know what? It can work when we pop.
Yeah, absolutely. And the thing is, like, I think, keep in mind, gold has been trying to break above roughly 2,100 since 2011, and it's done it 4 times just in the last 4 years. This is the 5th time in the last 4 years. And since 2011 up until now, it's failed every time. So I think traders have kind of been trained not to get overly bullish on these moves. But again, I think this time is different. I think this is going to be a completely different ballgame. That said, makes me sick to look at an option chain in gold, because we were shopping for the 2,200 calls for June last week. They were under $800. They were like $720 and didn't pull the trigger. So, it's a tough game sometimes. And now they're going for almost $5,000, I think, today. Gold is a really tough market. You got to be in it to win it, but at the same time, you got to be in it for a long time before something just happens suddenly without any warning. It's a tough one.
It's like I missed my chance, Carley, on my 3,000, 5,000, 1 by 60. I missed it. It lined up well last week. This week, no, I'll have to dial it back 1 by 30 now. Can't do it the ratio I wanted out there. So we'll see. Anything else? Yeah, are you a big silver head? I mean, it seems like it's popping up these days. You play in the other shiny stuff as well?
I'm not. We don't do a whole lot with silver. That's an even tougher market than gold. It's gone sideways for 6 years, hasn't really done anything. But again, I think we're kind of going to repeat the 2010, 2011 timeframe for gold. If that happens, there's a good chance we get silver following. But silver, the last time metals went berserk on the upside, silver took like 5-6 months before it actually moved. So gold went first and then silver came later. If silver makes a move, I wouldn't be surprised to see mid 30s. I don't think we're going to see the $50 range we saw in 2021. So, be very, very, very cautious at those high prices. There's people that have been hanging on to silver bullion and silver in any other forms since 2010 people. And so if they get even half their money back, they're going to want to cash out. So there could be a lot of selling up there once we get into the 30s.
Oh, interesting. Our old buddy, Mr. Uncle Mike, just on the show not that long ago, he likes to say, silver comes like a thief in the night. He's been the longest term silver bull that I certainly know out there. Must be liking this move out there this week. Let's go really quickly to silver, listeners, because it is popping this week. Like I said, it was in our vol movers and shakers, also in our underlying movers and shakers. Threatening a 25 right now in that front future, 24.60, up 1.25 points, or 5.3%. So maybe this is the week where that thief is coming, listeners. And it's certainly coming in terms of volume. Usually we see 22, maybe 25,000 contracts on an active week. 63,000 contracts on the tape in silver this week, listeners. So my goodness, things are lighting it up out there in silver right now. Let's see what is driving the tape. Is Uncle Mike buying all those upside calls? The answer right now with all of this paper, listeners, looks like the lion's share of it is going up in the May contract. Has about 48 days to go. So we're going to hang out there. The future right there at about a same level. Yeah, 24,595. In terms of volatility, now silver a little bit juicier, kind of like your small caps versus large caps, coming in at about a 23.10 right now, up about 1.75 points. So that's fairly frothy for a precious metal out there. And again, looking at equity vol right now, it's nearly 10 points premium to things like VIX. So those of you wringing your hands out there looking for vol, silver raises its hand and says, what about me? In terms of the skew last week, a little bit of evolution, which is different than what we saw in gold. Last week, the put 6.6% bid, coming in a little bit this week. Not surprising, 4.8% bid there. The calls also coming in, 10.6% bid last week. This week, 7.9%. Again, as we're blowing through some strikes to the upside, as Carley mentioned, there's some bulls out there that are going to take some of that off, and that's probably what they're doing this week. In terms of leading the dance, though, it wasn't the May contract. We have to go back to the April 25s. That was leading the dance out here this week with 2,700 contracts. So the big days are Monday and Tuesday, nearly 1,000 each on Tuesday, 588 today. Looks like back and forth opening to closing Monday and Tuesday. So folks opening on the 25 strike and then bailing as we get away from it, then opening again, it seems like. So a lot of that, obviously the 25 strike drawing a lot of attention out there. Also to be found in the May contract, where again, almost 28% of the paper went up this week in silver. The May 25s, not to be forgotten, doing 2,100 contracts this week as well. The big day for those, also Monday, 831, 724 on Tuesday. So same pattern, opening and closing. So opening on the 25s on Monday and then bailing on Tuesday in both April and May. That's kind of interesting. The OI on that strike, a little bit below 1,000 right now. And not to be outdone, let's go all the way to September. How about the September 30s, listeners? Somebody has an axe to grind out there to the tune of 2,200 going up this week. Let's see, where is the SEP future? It's at about, almost 25 even, 24,965 right now. And the 30s went up 1,020 times. Looks like it might have been a vertical, a 30, 34 vertical, because they both traded about 1,000 times on Monday, both opening. And then on Wednesday, we saw, looks like the 30-35 vertical opening 500 times and trading again today 750 times. So all sorts of weirdness. Carley, you like any of that? You like the 30-34 or the 30-35 upside verticals in silver going all the way out here? Where were we? Going all the way out to, just had it here. There we go. All the way out to September, Carley?
As much as I dislike participating in silver options, if that might not be such a bad play as a bit of a flyer. I'm just looking at premiums here. Actually, probably a little rich for me. I'd probably just, honestly, if I were going to play the upside looking for the 30s, which I think is possible, I would buy something real cheap. If you bought like September $40 calls, which are, I don't think we're going to see 40, but those things would blow up like crazy. And they're cheap.
Just play a little bit of that skew play and forget about the meatier stuff. Yeah,
exactly.
There's a certain logic to that. Well, we've already delved into energy and into metals. Where else would you like to go on this movable feast this week, Carley?
Ooh, you want to talk about stock indices?
I've never heard of those. We'll have to do that for the first time here this week.
Rare.
To the world of the equities we go.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, listeners, to the world of equities we go. Go into that drop down, pop out of metals, go up about 3 slots to equity indexes. From there, product family, U.S. Index E-mini. And then from there, it's an embarrassment of riches. Pick your poison. This could be the E-mini S&P, the Russell 2000, Nasdaq, maybe even Dow if you're feeling frosty out there. Carley, which of these indices is really lighting up your tape? A lot of people have been talking up small caps to us lately. Is that lighting up your tape as well? Are you still hanging out in the E-mini S&P? Where are you slinging all your premium these days out there in the equities?
I think the E-mini S&P is the place for trading, but for analysis, I think the Nasdaq's telling us the story.
Well, let's start then there. We don't talk a lot of Nasdaq here on the show.
Okay,
It's volume-wise, it can't hang with the others, but looking pretty good this week. E-mini Nasdaq, 211,000 contracts. Again, it's no E-mini S&P. You're talking less than a tenth of that, but still, from a overall volume perspective, 211,000 contracts is nothing to sneeze at. Carley, you said for analysis, you look to the Nasdaq. Why is that, and what is it telling you right now?
Well, normally I wouldn't do that, but in this odd scenario that we're in with the Magnificent Seven, which is now dwindling down to the Magnificent 3 or 4, and eventually I think might be one of those things where it's the last man standing, and then once NVIDIA rolls over, I think the whole market comes with it, which is completely illogical. It shouldn't happen, but I think that's exactly what's setting up to happen. On the monthly Nasdaq chart, if you draw a trend line through the 2000 high, which is the dot-com bubble, through the late 2021 high, which was arguably labeled as a bubble as well, through today's market, it comes in right around 18,000. We're a little above that on the Nasdaq 100, but I don't think we're going to last. I think once we get past payroll report and maybe past the March expiration next week, we start to get really top heavy, and I'm looking for a pretty sizable correction there.
Interesting. Once NVIDIA rolls over, you said, Carley, you just offended half of our audience who are diehard. How dare you call that a bubble? How dare you say that will correct? I wish we were just pricing up just right before this show started. As a bit of a lark, we were pricing up the 1,000 calls because everyone's fixated on 1,000. But I also went out to June just to price up the June 750s. We were there not too long ago, Carley, and now it's already threatening 1,000. The June 750s are still trading roughly $30. The puts, I mean. So yeah, there's a lot of juice to be found. Also, a lot of premium priced into that downside. That maybe what you're saying is not that crazy, Carley. Dare we speak it into the ether? That oh my goodness, right. Yeah, you're right.
There's a lot of dysfunction here. In 2021, it was Tesla stock that was pulling everything else up, and now it's NVIDIA. We all know what happened to Tesla and what the market followed through. I think we get a repeat. I'm not saying that we're going into bear market and the world's over as we know it. Not at all. But this is unhealthy. We need to see some selling to get some healthy market back.
Yeah, it's we are in that rarefied air out there. Let's see what the Nasdaq is telling us, listeners. And surprise, surprise, once again, everybody's playing in the contract that goes away in about 5 minutes. It's all near dated all the time. Now, before you write in with angry letters, we get the exchange folks, Carley, always write into me all in a huff saying it's not 0 day if it's not listed and expired the same day. You're talking about near dated flow. And that is true. A lot of these are near dated. They're not listed today and expiring today. They were listed earlier this week. But all the stuff we're talking about now is expiring in the next 24 hours. So that to me all falls under this 0 day umbrella. Call it what you will. Near dated, whatever you want. It's all going out pretty soon. At that point, it's kind of a distinction without a difference. But that's where everybody's playing. Once again, in the equities out here in Nasdaq this week. Listen, like we said, a pretty action-packed week out there. 211,000 contracts. And even though that sounds like a lot, there's a lot of spread out paper out here. You got to go all the way into the near dated stuff. In particular, we've got the 18,400 calls expiring tomorrow. So again, not 0 day. They were not listed today, but they are effectively a 0 day contract now. 3,200 of these bad boys. We're at 18,302 right now, if you're wondering. So 100 points in the Nasdaq by tomorrow. We've seen funkier things. It could have been, looks like an 18,350, maybe 18,400, 1 by 2, roughly 450 by 900 and so going up on Monday. So that could be 1 by 2 listeners. That possibly could be it. And we have 1,063 going up today against OI of just 308. So clearly folks are opening on the NASDAQ 18,400. So nearly 100 handle out of the money calls with 24 hours to go, listeners. The clock is literally ticking on these. Worth noting the 18,350s also traded 1,500 times today against an OI of 800. So there could be some vertical action. Obviously, it doesn't line up, but maybe they are buying the 18,350, 18,400, which is weird. How much are you getting for those 18,400s if you are selling them? But either way, a 100 handle move or even a 50 handle move in the Nasdaq is nothing to sneeze at. This week, it is off about 35 handles or 0.19%. Of course, still feeling some of its some of the thunder from earlier this week. Of course, if you fast forward to the end of our show last week, it's obviously still up quite a bit, but fascinating stuff. If we go a little bit beyond this 0-day palooza out here, let's see if we can see anything else with, dare I say it, a little bit more meat on the bone. Let's go out nearly 8 days, listeners, to the contract expiring on March 15th. That went up, 18,600s went up 3,000 times this week. By the way, the vol on that front-dated contract's at about a 23 3/4. If you go out all the way 8 days, it's at about nearly an 18. If you're wondering, what is that Nasdaq vol premium versus VIX? Well, there you go. And the 18,600. So again, 300 almost exactly handles out of the money. These calls trading 3,044 times this week. 1,866 all opening on Tuesday. Looks like it could have been a 18,200, 18,600 going up nearly 1 by 2. 999 versus 1,866. 18,000. So now you're talking in the money versus 2 out of the money. That's an intriguing 1 by 2 if that is the case as well. So again, a lot of funky flow going up in this very near dated stuff. Once you get beyond that, though, it's hard to find a lot of meat on the bone unless you're talking about 1,500 of the 20,000 calls. These expire in 54 days. 20,000 in the Nasdaq. Listen, that future's at an 18,552, so it is a little closer. But yeah, 20,000 again. If Nvidia hits 1,000, who knows? All bets are off in this kind of stuff, right? But still, very intriguing stuff. Let's look really quickly at these 20,000s, and I want to get some of you folks on the show as well. It looks like they traded all week long. Looks like it's a 19,500, 20,000 vertical, traded 127 times on Monday. And then the 20,000s kept trading the rest of the week, 430, 430. It's like opening on Tuesday and then closing on Wednesday. So who's opening on the 20,000s and then closing them a day later? And then 500 more today against OI of 292. So back and forth paper apparently on the 20,000s all week. Again, some weird flow out there. Speaking of weird products, though, we have a question about one. Let's get to that now. A little bit of your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, let's do it. Let's get out to your futures options feedback. This question came in a couple of weeks ago. I thought it was an interesting one. This comes in from just the creatively named Thomas, and he wants to know, I've been watching this massive sell-off in lithium lately. Is there any way to trade that at CME? And thanks for the show. Well, you're welcome for the show there, Thomas. And a very interesting question. You're right. Lithium has come under assault of late. Of course, it got bid up with all this optimism over EVs. Now that maybe we've seen some EV names coming down the other side of that, maybe that bubble bursting a little bit. Apple famously getting out of the game. Tesla having to slash prices. People talking about EV demand maybe starting to wane or at least plateau. Wherever you fall on that, it seems like demand for lithium has cratered. Most of those names have been annihilated over the course of the past 6 months to a year. So you are right to be intrigued by that marketplace. It certainly is volatile. If you want to go straight to the underlying, CME does have some products. They have cash-settled lithium futures, lithium hydroxide and lithium carbonate. These were launched back in 2021, so fairly recent additions to the offering here. They didn't exactly light the world on fire here. The most recent numbers I have here are from January of this year. only 468 tons worth. Again, I don't know the contract specs, so how many futures that equates to traded in 2022. But the OI skyrocketed last year, 34x, 14,500 tons. I have to imagine it's doing some pretty decent paper out there now as well. Again, not E-mini, not lighting the world on fire, and not really an options product yet. But there are underlying futures. I'm curious, Carley, over the last couple of years, as lithium got really hot and maybe now is starting to cool off a little bit, is this something that your clients at DeCarley have been intrigued by? And have you paid any attention at all to these lithium futures at CME?
I'm guilty. I have not really paid much attention. I don't recall a single client ever asking about it, but our clients are a different breed. We mostly handle options traders, so if there's no options market, I don't hear about it.
That's because you're the only broker. If there was only analyst. If there was another analyst, the other analyst heard about it. That's what it was. The other analyst was fielding all of the lithium calls over there at DeCarley. But just a good question. Again, not lighting the world on fire yet, but it is an intriguing one. So, Thomas, if you do want to go straight to the source, they are cash settled too. So people are always worried. Oh no, I'm going to get the lithium truck coming to my house at midnight, Carley, and chopping off a bunch of lithium on my front door. Not going to happen with the lithium futures. They are cash settled. So if that is your concern, that is something. But if you want to go straight to the source, you don't want to trade the ETFs or the stocks that hold and mine a lot of lithium, then maybe this is a way to go. The volume has increased. Again, I haven't crunched the numbers for Q1 of this year, so that could be tailing off, or maybe the sell-off is driving more paper. And obviously not really a big options story yet, but I would love to talk about these from an options perspective. Maybe that'll happen sometime soon. In the meantime, if you got more questions for us or for the only analyst at DeCarley, keep them coming. Speaking of which, if they want to reach out to said only analyst, Carley, where should they go? What should they do?
Website is DeCarleyTrading.com, DECARLEY, trading.com. We'd love to hear from you.
We haven't plugged your books in a bit. We talked about on the top of the show. If folks want to check out your books, any other new tomes on the horizon we can look forward to?
I'm in a bit of a hiatus. I'm busy, but if you're interested in option trading, like you probably are if you're listening, trading commodity options with creativity is probably a good start.
Remember, Carley, the only analyst there, the only one who can answer your calls about lithium as well. So hit her up. All your questions about lithium go straight to Carley. But check her out. She's obviously a good follow over there on the old Twitters as well. So if you want to check her out between appearances on this program. By the way, Carley, you were invoked recently on the show. We had your nemesis in life, Mr. Russell Rhodes, on, I think, this show. And some of our live listeners said, we need to get Carley and Russell on at the same time so they could have a debate. And I said, why would they debate? Why wouldn't they just talk nicely? But they said, no, they have to debate. So apparently you two have to debate. I don't know what you're going to, maybe it's lithium. Maybe you're going to debate about lithium. But
we'll see.
Prepare your talking points, you and Russell, head to head. It will be coming sometime soon on the network. So look forward to that heated debate, McLaughlin group style, coming soon. Look forward to it, Carl. And you two going to get at it, I'm thinking. So it should be kind of fun. I'll have to separate you two.
Sounds fun.
Separate you virtually. All right, so look forward to that in the near future, listeners. That is going to do it for us on the network. So no more to look forward to today, but you're in luck if you want more in your ear holes. We'll be back at you tomorrow, noon Central, 1 p.m. Eastern, talking a little bit of vol out there on Volatility Views. Who will be our special guest? Got to tune in to find out. As well as, of course, coming back afterwards for the aforementioned pro folks. They get the fun of a little bit of options oddities, myself and the Rock Lobster breaking down all this weird and wild paper on the tape this week. So make sure to check that out. If you want to check it out for yourselves, theoptionsinsider.com/pro is the place to go. Then we're back again next Monday with the option block. I actually will be traveling next week for the FIA show down in Boca. So I'll be talking a lot of futures with people next week. Hopefully I'll be available for our usual bat channel at TWIFO. Maybe I'll have to beam in from Florida. Either way, we'll get you your TWIFO. So look forward to it next week. Stay safe out there. We'll see you back here on TWIFO next week, listeners.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.